So, you're here because you want to start investing. Can I say, that is a suave move. Do you want help in starting to invest and pave the way for money? Well then, I've got one question for you. Ready for your financial breakthrough? Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and bring you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. In this video, we are going to introduce to you Warren Buffett and his top 3 rules for investing, especially for beginners. So, if you want to start investing for your financial breakthrough, this video is exclusively just for you. Without further ado, let's hop right into the video. Warren Buffett is an American legendary businessman, investor, and philanthropist. One of the richest people in the world, and is always on the high-ranking Forbes list of billionaires around the globe. He showed interest in business and investing and bought his first stock at the age of 11, the City Service preferred stock. Warren Buffett is globally recognized as one of the greatest investors with a net worth of $100 billion. Throughout his time, Warren Buffett has developed tips and strategies that are essential for seasoned investors and those just starting in the world of investment. Ambitious entrepreneurs can learn priceless lessons from Buffett's personal experiences, which each provide a look into the art of making wise financial choices and developing a lifetime of wealth. Warren Buffett said, "If you don't find a way to make money while you sleep, you will work until you die." Do you want to work until you're old and jitty? Of course not. That's why you're watching this video. Warren Buffett's journey to success shows his unmatched insight, and learning from his concepts can provide a solid foundation for navigating the complexities of finance. In this light, his 3 core rules for beginners are particularly worth noting. Rule number 1: invest in what you understand. To start, investing in what you know allows you to take advantage of your existing knowledge and expertise. When you have an in-depth understanding of a certain business or industry, you are more likely to assess its growth potential, its viability, and competitive advantages. An understanding of the business, especially on a deeper or personal level, allows you to recognize between strong organizations with long-term business models and those that are more risky. As Warren Buffett said, risk comes from not knowing what you are doing. Furthermore, this idea highlights the importance of conducting thorough study and due research before committing investment. Buffett's technique encourages investors, beginners or experienced, to do in-depth analysis of companies, including financial statements, management teams, market positioning, and development potential. This careful evaluation method reduces the possibility of making rash investing decisions based on short-term market movements or emotional emotions. Rule number 2: focus on long-term investments. The most important quality for an investor is temperament, not intellect. Warren Buffett highlights in his second rule that long-term investments have an edge over short-term gains. This principle emphasizes the importance of patience and strategic thought in the pursuit of wealth building, compared to the busy pace generally associated with short-term trading. Buffett's preference for long-term investments stems from his opinion that a company's underlying value emerges over time and that market swings are frequently just noise. Focusing on long-term investing also has its benefits. Some are: A. Reduced finance costs. Frequent trading pays more fees, taxes, and commissions, which can eat into earnings. Long-term investors avoid these expenses, allowing more of their money to stay invested and work for them. B. Gives your money time to grow. Of course, the longer you remain invested, the more time you can make more money. Remember that the value of companies could grow over time. C. Less to no emotional decision making. Short-term market swings always lead to emotional decisions, resulting in rash decisions. Long-term investors are better prepared to face fluctuations in markets and are less likely to make rash, fear-based decisions. Staying focused on your long-term goals can help you avoid making foolish decisions based on your emotions during a market drop. By focusing on the long term, investors can cut through the noise of short-term market trends and profit from their investment's genuine potential. According to Warren Buffett's rule, wealth growth is a long, thorough process that demands persistent patience. In an age when many people desire quick happiness, his approach serves as a classic reminder that large wealth can be created through consistent devotion to long-term investments and an unwavering trust in the power of compounding. Rule number 3. Look for business with a moat. When we say moat, it means competitive advantage. So, look for a business with a competitive advantage. This rule emphasizes the importance of identifying organizations with high entry barriers to guarantee long-term profitability and durability. Investing in organizations with a moat provides various benefits. Such businesses generally have distinguishing characteristics such as strong brands, economies of scale, proprietary technologies, or significant customer switching costs. These characteristics form a protective moat around the company, making it difficult for competitors to replicate its success or take its market share. On the other hand, failing to assess a company's moat can expose investors to danger. Investing in companies that do not have a durable competitive edge can expose them to market rivalry, technological disruptions, or changing consumer tastes. Such businesses may struggle to maintain revenue, causing stock price volatility and potentially decreasing investors' wealth. What's life without a little bit of bonus for our viewers and supporters? Here's a little encouragement for me and from Warren Buffett itself. Here's your bonus rule number 4. Trust and invest in yourself. The best investment you can make is an investment in yourself. The more you learn, the more you'll earn. Of course, none of your financial endeavors won't happen if you don't start within yourself, right? So I and Warren tells you, believe in yourself as an investor and block out the noise. Buffett emphasizes the significance of researching and trusting in your financial judgments. It's easy to be deceived by what people say, but keep in mind that you control your financial destiny or fate. Overcome your anxiety of making poor decisions and build confidence in your talents. Shut off the noise of fluctuating markets and concentrate on your long-term objectives. You can do it! With his tremendous success and decades of expertise, Buffett has broken down his knowledge into 3 essential laws that have the power to define our investment experiences. If you want to learn more about investing, Warren Buffett is one of the wisest choices to take with you on your journey to your financial breakthrough. Understanding Warren Buffett's 3 rules by heart is an encouragement to welcome hope, opportunity, and success. As we learn these concepts, we not only gain useful insights but also create a mindset that encourages development. Each rule contains a unique key to unlocking our potential to make informed decisions, accumulate money, and secure a better financial future. So, I ask you again, are you ready for your financial breakthrough? If yes, comment down below. We are so excited to see you thrive in your future endeavors in the world of investing. Thank you for watching. If you like this video, please don't forget to give a thumbs up, comment, and hit that notification bell so you don't miss out on our next videos.